if you look at the prices of American, European, and British bonds after the summer of 2021, you see that they've already gone past the peak. But then you have two key events. One is U.S. withdrawal from Afghanistan. The second one is the beginning of war in Ukraine. So that's August 2021, February 2022. So already after August of 2021, the bonds of these leading Western nations begin to collapse. And then this collapse continues after the war in Ukraine starts. And then they go into the biggest bear markets ever recorded in history of bond markets, which in case of the US goes back over 240 years. And basically what you have is a kind of a syndrome of geopolitical powers in decline. And basically three major effects happen. One is that bond prices collapse. And so we're already seeing this. And even though between 2023 and now, we had a kind of a consolidation in bond prices. So interest rates have been going up a little bit, but not a lot. You know, it was more like a horizontal drift, except now, since the Iran war failure, they've hit brand new 30-year lows again. I'm talking about European and British bonds, not necessarily the American ones. Okay, so bond prices go down, which means that interest rates go up. In spite of that, stock markets tend to go up. Why? Because what happens is that, let's say, you get evicted from Ukraine, you get evicted from the Middle East, you get evicted from your African colonies. That means that the cash flows that are accruing from those areas, from that collateral that you used to control, starts to shrink. And now the whole banking sector is going to be loaded up with a lot of bad debts. And so you're going to have banking institutions that in normal market conditions would fail. They're not going to be allowed to fail. What's going to happen is that the central bank is going to print up all the money needed to backstop those losses and to keep the institutions afloat. But what happens is when you start flooding this liquidity into the markets, most of it is going to be gravitating towards the stock markets because there's going to be inflationary pressures. We already see inflationary pressures. And as people lose confidence in the currency, they want to exchange it for real assets as soon as they can. So what they do is they dump cash and acquire stock shares instead of shares in actual companies. So part of the syndrome is that the stock markets go up. My first prediction of this development, which was actually, I made it in 2019, was that before the stock markets collapse, they'd probably go into a vertical climb. You know, we now see the NASDAQ and S&P 500, they practically look vertical now, but I don't know if this is it. I don't know if this is the Weimar unraveling moment yet. It's part of it, but when the whole thing plays out, maybe this part is going to look like a relatively small blip. And then the third effect is that the currency is going to collapse and you're going to get very high inflation and possibly hyperinflation. And I think that Europe, Great Britain, and Japan are in for hyperinflation. The United States might be able to engineer a softer landing for itself, but I think that Britain and the EU and Japan are in for a very, very rough ride, probably bond market collapse that could go close to zero, currency collapse that could be almost total, and the stock market that's going to go vertical. But we have to be clear that this is not an inflation hedge because usually the loss of purchasing power in these types of unraveling, we've seen this happen, you know, like in 2009, Zimbabwe was the best performing stock market in the world, not because things were great in Zimbabwe, but because the country was falling apart. And then in 2015, 2016, Venezuela was the world's best performing stock market, right? And in 2012, I think it was Argentina, and 100 years ago in the early 1920s, it was Germany. Usually the collapse of the currency far outpaces the stock market gains. You may gain 1,000% on your stock market investments, but you will still lose more than 90% in real terms. So what's left? The commodity prices. And I think that that's the one sector where real values will remain substantial. When purchasing power in the system collapses, then everything loses value. But things like gold and silver and arable land, those assets will retain value. And maybe those are the only real hedges against inflation. You know, what I've been observing for the last 10 years at least is that we've had these hockey stick price charts in one market after another. It was palladium. It was cobalt in 2015, 2016. It was gold and silver very recently. Things like Bitcoin, stocks like Tesla, Nvidia, so many of them. And I thought like, this is really strange because it's just like one thing after another. We've had practically what Japan started on large scale QE in 2000, and that gave rise to the big carry trade. And so we've had this great inflation of monetary liquidity in Western financial markets. So we have more than $220 trillion of liquid investable assets in the shadow banking system in the West. And so that's hedge funds, pension funds, endowments, insurance, reinsurance company. These big financial institutions, they have loads and loads of money to invest. And on the other side, you have these tiny markets like gold, which is maybe, 20, 30 trillion. If you add everything together, copper, platinum, palladium, tomorrow it could be cotton or oat futures, whatever. And so it's enough for just a small fraction of these money managers in the shadow banking system to say, maybe we need to increase our allocation to gold, and gold goes vertical. And so I think that this is happening. That could be the first leg of the big bull run in gold, and it could go to 10,000. And then if it goes to that vertical stage, it can go anywhere, because markets can get very, very rational. And who knew that Bitcoin would end up going to $120,000 per Bitcoin? 10 years ago, it was trading at what? 400, 500. And at that point, if you told somebody, guess what, Bitcoin's going to go to over $100,000, they would lock you up in a nut house. But that's what happened. The party that took the biggest risks with the highest stakes is the biggest winner, which is Iran, because they went from a country that has been harassed and oppressed by European colonial powers for 120 years, with wars imposed on it, with famines imposed on it, with maximum pressure sanctions imposed on it, and pushed into these desperate negotiations where the Iranians would bend themselves out of shape to get the sanctions lifted, to be able to trade with the rest of the world. And then the other side getting all the concessions and then completely disrespecting all their commitment. And now the Iranians have said, okay, no mas, enough. Now we're going to meet force with force. And so suddenly they're finding themselves in the driver's seat and taking full advantage of their escalatory dominance in the region. The change in the security architecture of the region is still going to be bumpy. I don't know what Israel is doing, but there's some ominous signs that they might be preparing a nuclear attack on Iran. But let's hope that it doesn't come to that. And then I think if Iran survives, if Iran remains in their dominant position in Western Asia, then the other winners are Russia and China, because that makes the Belt and Road Initiative viable, and that makes the international north-south transport corridor viable, which is extremely important for Russia because it bypasses the Suez choke point and Bab el-Mandeb choke point, and it really starts to put a very firm foundation underneath the multipolar integrations, at least on Eurasian continent. With the Iranians taking full control of the Strait of Hormuz, they can condition that ships and cargoes may pass provided that they were not paid in dollars, and they have already imposed this. So ships and cargoes that can pass through the Strait of Hormuz have to be paid for in Chinese yuan, or they have to be paid for in other currencies, but not in US dollars. I didn't find corroboration of this, but apparently the Iranians have offered Europeans that if the cargoes are paid for in euros, then they may pass, which is very interesting, which suggests that the Iranians are being extremely, extremely clever about this, because access to US dollar liquidity is one of the major Achilles heels for European economies. And they depend on Federal Reserve swap lines to make sure that they have that dollar liquidity, because to participate in global trade, to buy and sell oil and gas and other bulk cargoes around the world, they need dollars. But now if the Iranians says no, don't worry, if the cargoes are paid for in euros, then you're good. So now suddenly the Europeans think we just got one of our big vulnerabilities cured here, but I don't know whether this actually went through, because there are many European players who would jump on this instantly, but then there are others like I think Macron and Merz who might not, and never mind the UK. But all the signs are that the Iranians have every intention of using this leverage to their best advantage, and their best advantage is to end this petrodollar system. I think that NATO has already lost its purpose. I think internally it's already disintegrating. I think that if some nation within NATO, let's say, sustained or orchestrated an attack on itself to invoke Article 5, I think some nations would say like, yeah, okay, we'll honor Article 5 and we'll come in your defense. But many would say, no, this has nothing to do with us. Thank you very much. We're not interested. The United States is clearly pulling away. It's exerting pressure on NATO member nations to part ways. Trump is giving very clear signals that he's not interested in leaving, nations squabbling between themselves to define the future. And, there's a lot of historical rivalries there where, like the French would like to be in charge of the new Europe, but the Germans are not interested in French being in charge of the new Europe. So you have French-German rivalry, then you have German-Polish rivalry, then you have German-Scandinavian nations rivalry, and so forth. The fact that NATO is becoming increasingly irrelevant, we can also see it in the fact that the British have been very busy setting up alternative patchwork of alliances that consists of NATO member countries, but it functions outside of the scope of NATO. For example, the 10 naval chiefs of North European navies have signed a document towards building something called the Joint Expeditionary Force under the leadership of Great Britain, headquartered in London. And obviously, the whole purpose of this new alliance is to confront Russia. So they're building their war plans, but they're leaving NATO behind, because I think that even NATO member nations are starting to realize that alliance is growing irrelevant and we need to build new alliances. Now, what the effect of this is going to be, I don't really know. I don't really understand why 9 North European nations like Norway and Sweden and Finland and the Baltic states and Netherlands, why they would all put their navies under London's command. What they risk is very, very obvious, but why would they do it and what they gain out of it? It's not clear, but it's going to lead to tensions. It's going to lead to possibly military confrontations with Russia. And then that's going to lead to political crises at home. Because, if you're victorious in war, and everything goes your way, well then, great. But if anything goes wrong at all, it tends to lead to political collapse at home. Obviously, we're not dealing with interests of democratic societies expressed through, legitimate political structures. We're dealing with some kind of an underhanded secret diplomacy that's still trying to engineer a world war for whatever their agenda is.